So, check this out, people. I was watching the Schwab Network, and they're talking about AMC. They're talking about how AMC is going to issue new shares eventually, I believe sometime this year. They're also talking about how AMC will be struggling the rest of the year of 2024 into 2025. One analyst believes that AMC will hit zero eventually, and I agree. The other analyst, when she speaks positively about AMC, she sounds like one of those drug commercials. That's how she sounds when she speaks good about AMC, like those drug commercials, who tell you the drug is good for you, then later on tell you how bad it's going to be for you in the end. And so they're speaking about how AMC will issue new shares. And unfortunately, these YouTubers who go on YouTube and say that these people are shills, that they get paid to say these things because anyone who disagrees with them is a shill. Anyone who says the opposite of what these ignorant YouTubers who have no idea what it is they're talking about, they simply get their information from other YouTubers. And since they get their information from other YouTubers, all they're doing is regurgitating and eating someone else's vomit. Because just like a dog who throws up and then eats his own vomit, this is what these YouTubers do. They take their content from other YouTubers and then go on YouTube and regurgitate that information to you, rather than listening to reputable investors, news companies. Even Adam Aaron, who himself said, don't buy into AMC because if you do, you will possibly lose most, if not all, of your money. But they would rather listen to AMC pumpers than the CEO himself, who's telling you not to buy into his shitty stock. So let's go ahead and listen to the Schwab Network, and let's hear what they have to say about AMC. Here we have two analysts. One is pro-AMC, the other is a realist.
David Traynor, CEO, New Constructs, and Alicia Reese, Vice President of Equity Research, Wedbush Securities. Thank you both for being with us. David, I want to start with you. You have this, you call this a zombie. AMC is on your zombie list. What's the basis for that? Is it still a zombie stock to you, and why?
It's still a zombie stock because the underlying business model is effectively broken. It's never really going to be a very profitable company, and it doesn't have a lot of cash to survive forever at its burn rates, and the valuation is outrageous. I mean, it's still implying some huge percentage of box office market share that really never been achieved in the history of the business, and so. Yeah, we think this stock's got a long way to go before it hits bottom. We think it goes to zero, especially when you consider all the debt out there. Unless unsuspecting investors continue to buy the stock, the apes or whatever they're willing to sell you. As long as people are willing to do that, it can maybe go on forever, but we hope that people are wisen up.
All right, Alicia, I want to get your thoughts on the latest quarterly results. So you have a neutral rating on AMC and a $6 price target. Stock is under pressure today, trading below $5 a share. So what's your take on their latest numbers?
Yeah, there's certainly some puts and takes on the quarter specifically. It was a tough quarter with the SAG-AFTRA strikes pushing some titles out of the quarter. It would have been left for dead, but AMC was able to actually bring in Taylor Swift and Beyonce concert films, and as distributor, they got pretty significant market share. They also got really great film rent rates. The payment splits between the concert movies. Because they were not studios, they got got significantly better rates from them and as a distributor. So, I mean, the quarter was actually pretty decent on a market share perspective, and, they actually earned on EBITDA, but, you look at free cash flow and they lost 150 million in the quarter. So that's not sustainable, and obviously they need to continue issuing shares. Their shareholders are not pleased with that, so that drops. But, they have over $3 billion in debt coming due in the next 3 years that they have to either pay down, renegotiate, or, obviously some combination of that. They're not going to have the cash to pay $3 billion in the next 3 years. So they're going to extend some of those maturities, pay down as much as they can, issue shares. Shareholders are not going to like that, and shares are going to continue to drop for a bit. But, I don't think that it's necessarily a broken model. I do think with the share gains and as the volume of content comes back, they do have a way forward. They just have to really try to find line.
So, Alicia, I want to just ask you a follow-up. What's that way forward then? If you say it's not a broken model, what is the way forward?
Well, they continue to shutter their underperforming theaters, which they have been doing. As all the leases have come up for renegotiation, they drop the leases on underperforming theaters. They had far too many in their footprint. So here and there, they're picking up some high-performing assets. But more importantly, the performing assets that they have in their portfolio are the ones that have the premium large format screens and premium amenities. One of the things they did on distributing Taylor Swift and Beyonce films is they really expanded their merchandise sales. So that's also a high margin venture. They're doing a lot more with food and the food and beverage. I think you saw with Dune, they had some kind of wild things going on with the popcorn buckets. It gets a lot of attention. It just helps their numbers overall. If they continue to do these market share gaining activities, that can help them as that volume really ramps up. And I think you'll see them gain some more market share on events like Dune 2, because it is a huge IMAX film, and AMC has the largest footprint of IMAX in North America. So things like that will help them.
David, sorry, Alicia, I didn't mean to cut you off. Did you have a final thought there? Okay. So, David, I want to bring you in, especially, so Alicia mentioned the potential for issuing more shares that will cause further dilution. Yes, AMC has had some strong flashpoints, if you will, when you think about the Beyonce event, the Taylor Swift event, et cetera. But is that enough?
I don't think so. I mean, look, the dilution has been outrageous. I mean, they went so far as to create a new special security just to get around the rules in their own charter to further dilute shareholders. I mean, this has been a diluting nightmare. I mean, and the fact that, as Alicia said, look, they got a lot of debt coming due, so they're just going to keep diluting folks. And and Alicia's right. They get some market share gains and a nice, flashpoints for Taylor Swift and Beyonce, but those are one time. Taylor Swift and Beyonce don't just happen every year, or every month, right, or every quarter. And if they can't make money with those excellent one-time events, when are they ever going to make money? And I get it. You can do some funny things with popcorn, etc. But I mean, movie theaters have gone out of business and bankrupt over the last 10 years because you don't really make money selling popcorn. All right, and merchandise and high margin stuff. It's great, but again, if you can't make money when Taylor Swift and Beyonce are crushing it around the world, that's not going to do it for you. I don't know about you, but as an investor, equity investor, even a debt investor, I'd have a hard time throwing more good money after bad.
And Alicia, I want to ask you about I guess AMC would likely, besides issuing more shares to address its debt load, what's the potential for growth this year? Especially, last year they had to deal with the strike, so that certainly delayed some things. Is there some potential regaining market share because of no longer having to deal with that?
Sure. So I put out a couple things. They were actually, cash flow positive in both 2018 and 2019, and those are really strong box office years. And I do think we are rebounding toward that box office momentum. 2024 is going to be a down year, but just slightly. 2025, all those films that were delayed in 2024 because of the strikes are just getting pushed into 2025. So as that rebounds, you have AMC, who has a leaner just a leaner model than they did pre-pandemic. They were, spending like drunken sailors back then, but now they're a lot tighter now. They do have all this debt, but they have paid it down to lower levels than they were pre-pandemic. So I do think, if they keep a tight ship, and as you see that volume rebound in 2025, and as they, there are a lot of other artists that they could get. Like, say they did, they have quite a few artists coming forward. There, Louis Capaldi could get in there and have get a lot of attention as well. I'm sure, Taylor Swift's not the only one. She's the biggest, but not the only one. They just have to keep doing this when there is, slow pockets of box office, like you're going to see in 2024. But 2025 volume is really ticking higher, as is 2026. I think they're going to be okay.
Okay, we shall see. I think David has a different perspective on that one. Right now, stock down 11%. I don't, definitely not near that $6 price target. We'll see if that comes to pass. David, quickly, where do you see the price target or the price on this?
I think there's a big chance this goes to zero. That's why it's on our zombie stock list with about 25 other stocks.
All right, we'll have to leave it there. David Trainer, New Construct CEO, Alicia Redbush, Wedbush Securities. That's going to do it for Trading 360. I'm Diane King Hall.
Now, you hear the realistic analyst saying that he believes AMC is going to zero eventually. AMC will get into another $3 billion debt this year. This year alone, it's going to take them at least 3 years to pay. $3 billion. And even with the whole Taylor Swift and Beyonce nonsense that they try to pump to make it look like they're doing great, they are still not even halfway caught up to their debt. Now, in order for them to continue this little, this spike in revenue that they've had with Beyonce and Taylor Swift, this has to happen at least 2 or 3 times a year, every year for the next 10 years, just so that they can get caught up halfway. When you listen to the second analyst, the female, and she describes AMC in a positive way, she sounds like those drug commercials who tell you, if you take this medicine for your diabetes, it's going to be good for you, it's going to help you, it's going to bring your diabetes down. Then she goes on to tell you the side effects of the drug. The side effects may cause heart palpitation, loss of hair, diarrhea, flushing, vision loss, hearing loss, one leg smaller than the other, tripping, falling asleep while driving. She starts off telling you how good AMC is, but then later on tells you the side effects of what the drug AMC is going to do for you in the long run. And the side effects are worse than the cure. And you got these people who continue to pump AMC, and anyone who contradicts them, they call them a shill. Anyone who says otherwise, including mainstream media, they say those people are shills. They're paid shills because God forbid that anyone who's realistic about AMC should be a shill, including the CEO, Adam Aaron, who told you last year not to buy into his shitty stock, because if you do, you could lose most, if not all, of your monies. The CEO. I bet you don't call Adam Aaron a shill, right? But you call me and anyone else who's been telling you for the past 3 years that AMC is a failing company. And even though they see it, even though they've lost all their money, all of it, 99% of it, they continue to call people like me shills, even though we've been right on everything when it comes to AMC. And so people, AMC will issue new shares. They will issue new shares, and that will bring the price of AMC even lower, because Adam Aaron will continue to dilute. He will dilute again and again and again until the stock hits zero. And the only one getting rich off of AMC is Adam Aaron. So people, I'm sorry to tell you, you were wrong. You were wrong. You were wrong. You were wrong.